Here are 9 news from the world of the cryptocurrency industry. First, news. Floki Inu developers to launch a trading Telegram bot. The developers of the memecoin project Floki Inu are set to launch a trading bot on the Telegram Messenger. Currently, the tool supports operations only on the BNB chain network. The Floki trading bot is currently in closed beta testing and is available to a small number of users, as the project team announced on X. Trading Telegram bots automate tasks based on user needs. These tools are used for trading in the decentralized finance, DeFi, sector, managing wallets, earning from yield farming, exchanging tokens, and other activities. According to Floki developers, the project's bot is designed for buying and selling cryptocurrencies across different blockchains. Our goal is to improve the trading process, making it faster, simpler, and more efficient, the announcement states. The bot charges a 1% fee on each transaction, using the memecoin Floki as its utility token. About 50% of the collected fees will be directed to purchasing the coin on the open market, which should enhance the asset's utility and accelerate its deflation. The Floki team expects to launch the trading bot by mid-June. In addition to BNB chain, future support for Ethereum and Base networks is planned. Currently, the Floki trading bot is in closed beta testing. According to the announcement, the version is open to the first 150 users, who will gain access to the tool on a first-come, first-served basis. The testing phase will last 2 weeks and is intended to identify and fix early bugs, gather user feedback to improve their experience, test the project team's market assumptions. Beta test participants must complete several tasks, including providing feedback and trading via the bot. They will receive rewards at the end of the phase. According to CoinGecko, the price of Floki has risen by more than 17.1% in the last 24 hours. At the time of writing, the asset is trading at $0.00030022. The daily trading volume of the memecoin has surged by 84% to $1.2 billion, and Floki's market capitalization has reached $2.8 billion. Second, news. No inflows for spot BTC ETFs in the last 24 hours. According to Farsight Investors, on May 27, spot Bitcoin exchange-traded funds, ETFs, recorded 0 inflows. This is the first instance in the past 2 weeks and the fourth since the launch of Bitcoin ETFs in January 2024. Experts attribute the 0 inflows to a correction in the price of the leading cryptocurrency. Over the past 24 hours, Bitcoin has depreciated by nearly 40%, and over the week, its value has dropped by about 3.7%, reaching $68,330. In the first 2 weeks of May alone, net inflows into spot BTC ETFs reached $1.3 billion, offsetting the April outflow. On May 17, Bloomberg senior equity analyst Eric Balchunas advised investors not to worry about the short-term withdrawal of funds from ETFs, as Bitcoin-based funds are expected to deliver net positive long-term returns. Additionally, on May 27, MicroStrategy founder Michael Saylor reported that spot BTC ETFs now hold over 1 million bitcoins, nearly 5% of the flagship asset's circulating supply. The most significant holding, 287168 BTC, is in BlackRock's spot Bitcoin ETF. Third, news. Jasmy coin leads growth among top 100 cryptocurrencies. In the last 24 hours, the price of Jasmy coin, Jasmy, has risen by more than 26%, trading around $0.028. This is the first time since spring 2022 that the coin has reached this level. The Japanese Bitcoin also shows impressive trading dynamics, with daily trading volume for Jasmy increasing by 600% to $422 million. The asset's market capitalization has approached $1.4 billion, making it the 69th largest cryptocurrency today. However, it still has a long way to go to reach its all-time high of $5 set in February 2021. What triggered such a rapid increase in the price of the Japanese Bitcoin? It is driven by a bullish market trend, thanks to the approval of spot Ethereum ETFs. According to Sentiment, the number of large transactions involving Jasmy worth at least $100,000 has increased more than 8-fold from 4 to 37 in the last 24 hours. This high activity among crypto whales likely indicates significant price volatility. It's quite possible that we will see further price movement due to investors taking short-term profits or even a mass sell-off. Fourth, news. No new cryptocurrency ETFs expected soon. J.P. Morgan experts suggest that more exchange-traded funds will only appear if the U.S. Congress enacts a law stipulating that digital assets will not be classified as securities. J.P. Morgan's managing director and global market strategist Nikolaos Panagurtsoglou believes that the regulator's decision on spot Ethereum ETFs was made with difficulty, given the uncertainty over whether to classify Ether as a security. We do not think the SEC will approve ETFs for Solana or other coins, considering the Commission's firm stance that tokens, except for Bitcoin and Ether, should be classified as securities, J.P. Morgan analysts emphasize. Fifth news. Donald Trump wants to use Bitcoin to reduce U.S. national debt. As it is known, David Bailey works as a cryptocurrency consultant in the campaign headquarters of former U.S. President Donald Trump. According to Bailey, Trump recently inquired about how Bitcoin could be used to solve the country's national debt problem. During the conversation, Bailey replied that he was ready to offer several ideas, but the issue requires more thorough work. It should be noted that Donald Trump increasingly uses the topic of cryptocurrencies in his election campaign, urging all crypto enthusiasts to vote for him. If he wins the November 2024 election, Trump promises to support the self-storage of cryptocurrencies in personal wallets and to free Silk Road founder Ross Ulbricht, who is serving a life sentence. He also promises to ban the issuance of a digital dollar. The growing U.S. national debt remains a heavy burden on the country's economy, and the authorities have yet to propose a clear plan to reduce it in the foreseeable future. Perhaps Donald Trump can solve it with Bitcoin, provided he wins the presidential campaign. Sixth news. Hong Kong Securities Commission begins comprehensive checks on crypto companies. Starting June 1, the Hong Kong Securities and Futures Commission, SFC, will begin on-site inspections. The financial regulator reminded that by this date, all virtual asset trading platforms, VAPs, must be either licensed by the SFC or considered temporarily licensed during the application review process. Operating VAPs without an SFC license will be considered a criminal offense and a violation of anti-money laundering and counter-terrorism financing laws. The SFC will focus on ensuring compliance with the prohibition on mainland China residents accessing any virtual asset-related services during inspections. Earlier this year, the SFC introduced a mandatory requirement for all cryptocurrency exchanges to have 50% insurance coverage for user deposits. Seventh news. Riot Platforms makes an offer to acquire Bitfarms shares. American mining company Riot Platforms, one of the largest and most well-known for mining bitcoins and cryptocurrencies, has made an offer to acquire all outstanding shares of crypto miner Bitfarms, valuing them at approximately $950 million, Reuters reports. Last month, Bitfarms' board of directors rejected a similar offer from Riot Platforms, prompting the company to make a new one. Riot CEO Jason Les expressed disappointment that Bitfarms rejected the previous offer without engaging in substantive dialogue. Riot has already acquired 9.25% of Bitfarms shares, becoming the company's largest shareholder. The current offer includes a payment of $2.30 in cash and Riot shares for each Bitfarms share. Eighth news. Bernstein analysts forecast growth of the crypto ETF market to $450 billion. Analysts at brokerage firm Bernstein forecast the growth of the spot exchange-traded funds, ETFs, market, focused on Bitcoin and Ether, to $450 billion, reports CoinDesk. According to Bernstein analysts Gautam Chugani and Mahika Sapra, over the next 18 to 24 months, more than $100 billion is expected to flow into Bitcoin and Ether ETFs. Their forecasts are based on Bitcoin reaching $90,000 by the end of this year and $150,000 by the end of 2025. In their statement, Bernstein analysts also noted that the news of the U.S. Securities and Exchange Commission's approval to launch spot ETFs for Ether is positive for the asset, as Ether will now be perceived by investors as a commodity rather than a security. They also estimate that other digital currencies may follow Ether's example and be allowed to launch as spot ETFs. The main contender for this currently is the Solana token. Ninth news. BitGet confirms overall asset reserve ratio of 169%. In its latest Proof of Reserves (POR) report for May 2024, cryptocurrency exchange BitGet confirmed an overall asset reserve ratio of 169%, with BTC and ETH ratios at 295% and 209%, respectively. The report also highlights a significant increase in user assets for USDT and ETH, with both indicators showing growth of 64% and 72% since January 2024. Gracie Chen, BitGet's CEO, emphasized the importance of the recent POR update, underscoring BitGet's unwavering commitment to transparency and financial stability. BitGet firmly adheres to the principles of transparency and financial stability. The latest POR update confirms our commitment to protecting user assets and upholding the highest reporting standards. With an overall reserve ratio of 169%, BitGet remains at the forefront of the cryptocurrency exchange industry, setting an example for others to follow, Chen noted. BitGet's dedication to transparency and security is evident in the regularly updated reserve ratios for leading cryptocurrencies, including BTC, ETH, USDT, and USDC. BitGet's efforts to ensure transparency are not limited to disclosing proof of reserves information. In 2022, the exchange established a user protection fund, which has grown from $200 million to $450 million. According to CoinMarketCap, as of April 22, 2024, BitGet's total reserves exceed $2.9 billion.